All right, welcome to Talk Tickers. We're diving headfirst into the world of Zscaler and their recent Q2 2025 earnings call. It's a lot to unpack, but that's where we come in. We've got the highlights, the lowlights, and everything in between ready to go.
Buckle up, because Zscaler didn't hold back this quarter. They really knocked it out of the park, exceeding expectations across the board. Revenue, up. Billings, up. And that all-important ARR, you guessed it, soaring high, plus the profitability. Now that's a story in itself.
Okay, so paint the picture for us. Just how good were these numbers? What are we looking at here?
Well, revenue jumped a solid 23% to $648 million. Not too shabby, right? And billings followed suit, climbing 18% to reach $743 million. But the real showstopper, that would be their ARR, or annual recurring revenue, clocking in at over $2.7 billion.
$2.7 billion with a B. That's got to put a smile on any investor's face.
Yeah.
And a 23% increase year over year. That's not just growth, it's momentum.
So what's fueling this success? What's the secret sauce behind these numbers? Seems like their go-to-market strategy is really firing on all cylinders. They specifically called out improved sales productivity, which is music to any company's ears. What does that translate to? Double-digit growth in both new customer wins and upsells from their existing client base.
So they're not just attracting new business, but also getting their current customers to spend more. That's a recipe for sustainable growth right there.
Exactly. And there's another interesting tidbit they mention: lower sales attrition, meaning they're keeping their sales teams happy and engaged, which is no small feat in today's environment. All of this points to a more efficient, more effective sales operation.
So it's not just about having a great product. They've figured out how to sell it and keep their sales force strong. Makes a huge difference in the long run. But let's talk about that ARR for a second. Over $2.7 billion, growing at 23%. What's driving this continued demand, especially given the current economic headwinds?
That's the million-dollar question, isn't it? And you know what? They're even projecting to hit the $3 billion ARR mark by the end of their fiscal year. Now that's confidence. It suggests they've got a healthy pipeline and that the sales momentum isn't slowing down anytime soon.
All right, let's switch gears for a moment, talk about net retention rate, or NRR, always a key metric for SaaS companies. Theirs came in at a respectable 115%. That means existing customers are spending 15% more than last year. But I recall them mentioning a potential moderation of this rate down the line. What's the thinking there?
Yes. While 115% is definitely a strong NRR, they did point out a potential factor that could influence it going forward. You see, they're having a lot of success landing larger, more comprehensive deals up front. Plus, they're getting faster upsells from those customers.
Makes sense. If a customer signs a big deal from the get-go, there might be less room for those rapid percentage increases in subsequent years, right?
Exactly. It's not necessarily a bad thing. It's more like a natural consequence of their success in closing those bigger deals up front. But it's something to keep an eye on as we analyze future NRR numbers.
Interesting point. Sometimes strong performance in one area can create a different dynamic in another. Now let's move on to a topic that always gets investors excited: profitability. And boy, did those numbers shine this quarter.
No kidding. Their operating profit jumped a whopping 36% year over year, resulting in a nearly 22% operating margin. And if that wasn't impressive enough, their free cash flow margin hit a record for Q2 at 22%. That's serious cash generation.
And that's what gets investors really excited. It's a sign of a mature, efficient business that can generate substantial cash flow from its operations. Now, let's delve into a concept that's central to Zscaler's narrative: zero trust everywhere. It's a buzzword we hear a lot these days, but what does it actually mean in the context of their offerings?
Think of zero trust everywhere as their overarching security philosophy. It's all about moving away from that old school idea of a secure perimeter and assuming that threats can lurk anywhere, inside or outside the network. So no more blind trust. Everything needs to be verified.
Sounds like a pretty fundamental shift in how we think about security.
Absolutely. They're applying this zero trust principle across three key areas. First, you have zero trust for users. Basically, no user gets a free pass once they're inside the network. Every single access attempt is scrutinized and verified.
So no more assuming that just because someone's logged in, they're automatically trustworthy.
Precisely. Then you have zero trust for cloud workloads. This focuses on securing the communication between applications and services in the cloud. Because let's face it, with so much data moving to the cloud, that's where the bad guys are increasingly targeting their attacks.
Makes sense. You can't just assume that your cloud environment is inherently secure. And what's the third area?
The third piece of the puzzle is zero trust branch. This extends those same principles to remote locations like branch offices, factories, even IoT devices. Essentially, they're treating these endpoints as untrusted entities until proven otherwise.
So it's a holistic approach, encompassing users, cloud workloads, and even remote branches. And they mentioned over 130 enterprises have already adopted this zero trust everywhere approach. Plus, they're aiming to triple that number in the next 18 months.
That's a bold target, but it shows the momentum they're seeing. It seems like this zero trust concept is really resonating with organizations looking to bolster their security posture in this increasingly complex threat landscape.
Now, one of the key enablers of this zero trust everywhere vision is their zero trust branch solution. What's so special about it? What problem does it solve?
This is where things get really interesting. Zero Trust Branch is designed to simplify security at those remote locations. Think about it. Traditionally, branch offices have relied on a whole mess of hardware like firewalls, NACs, switches. It's a complicated and expensive setup.
And often a pain to manage.
Exactly. So what Zscaler does is they essentially replace all of that with a cloud-delivered service. This not only potentially saves customers a ton of money and headaches, but it also provides a more consistent and robust security posture across all those locations.
They're like centralizing and streamlining security for all your branches, no matter where they are.
You got it. And the numbers speak for themselves. They said that 57% of the Zero Trust Branch customers they signed up last quarter were brand new to Zscaler. That's a powerful customer acquisition tool.
So it's not just existing customers expanding their deployments. It's attracting a whole new wave of organizations to the Zscaler platform. They even mentioned some big wins, like that Global 2000 manufacturing company making a seven-figure purchase. That's got to be a good sign.
Oh, yeah, definitely. And then there was that large communications equipment company ditching their traditional SD-WAN solution in favor of Zscaler's Zero Trust Branch. These are real-world examples of how this solution is disrupting the market and changing the way organizations think about branch security.
And it's not just about winning new logos. They're also making inroads with some of the biggest companies out there. They highlighted a huge deal with the Fortune 50 energy company, deploying their platform, including Zero Trust Branch and cloud security, for 25,000 users. That's a massive win, especially in this economic climate.
No doubt about it. That kind of deal shows they can scale their platform to meet the needs of even the largest enterprises. And let's not forget that 25% year-over-year growth in customers spending over $1 million in ARR. They're clearly winning the trust of those high-value accounts.
Speaking of large enterprise wins, another area that caught my eye was their data protection business. Over 40% year-over-year growth in net new ACV.
Oh.
That's not messing around. What's driving that success?
I think there are a couple of factors at play here. First, we're seeing a big push towards consolidation in the security market. Organizations are tired of juggling a bunch of different point solutions for things like data loss prevention and other data security needs. They want a more integrated platform, and that's where Zscaler comes in.
Simplifying the security stack, reducing complexity, making things easier to manage. It's a theme we're seeing across the industry.
Absolutely. And then you have the rise of generative AI, which is creating a whole new set of data security challenges. Companies are realizing they need to protect sensitive information in this new AI-driven world, and Zscaler is ready with a comprehensive data protection suite that covers data at rest, in motion, and in use.
So they're addressing both the consolidation trend and the emerging needs created by AI. Smart move. And they highlighted that example of the Global 2000 retail company significantly expanding their data protection deployment.
That's a good sign, right?
Definitely. Issues are not just winning new customers in this space, but also expanding their footprint within existing accounts. And they mentioned that a large majority of their biggest customers have adopted multiple data protection modules. That tells you they're seeing real value in what Zscaler is offering.
They even explicitly mentioned that customers are buying their data protection solutions specifically to secure their use of public AI applications. That's an important nugget, isn't it? It is. It shows they're not just reacting to market trends, they're anticipating them and building solutions to address emerging needs. That kind of agility is critical in the fast-paced world of cybersecurity.
Now, speaking of AI, they spent a good chunk of the call talking about their own AI innovations. It sounds like they're not just defending against AI threats, but also embedding AI into their platform to enhance their offerings.
That's exactly right. They talked about developing an LLM proxy, which helps secure the use of private AI models within organizations. And they highlighted strong growth with ZDX Copilot, their AI-powered solution for improving end-user experience monitoring.
So they're leveraging AI on multiple fronts, both for security and for enhancing their existing solutions. Makes sense given the transformative potential of AI across so many industries.
Definitely. And they're not stopping there. They're also using AI for things like automated data classification, vulnerability detection, and even AI-powered security analytics. The fact that their revenue from AI analytics nearly doubled year over year tells you they're on the right track.
They even recently hired a new EVP of AI innovations. That shows they're serious about making AI a core part of their strategy going forward. It's amazing to see how AI is simultaneously creating challenges and opportunities in cybersecurity, and Zscaler seems to be tackling both sides of that coin. Now let's shift gears for a moment and talk about partnerships. They mentioned that their relationships with global system integrators, or GSIs, are playing a more significant role in their success. Why is that important?
GSIs are those big consulting firms that help large enterprises implement complex technology projects, and these firms are increasingly incorporating Zscaler into their network and security transformation practices.
So Zscaler is essentially becoming part of the recommended solution when these GSIs go in to advise their clients. That's a pretty powerful endorsement.
It is. It gives Zscaler access to a much wider pool of potential customers and adds a layer of credibility to their offerings. GSIs are often seen as trusted advisors to large organizations, so their recommendation carries a lot of weight.
Makes sense. It's all about leveraging those existing relationships and expertise to accelerate adoption, especially in those complex enterprise environments. And they mentioned that GSIs played a key role in closing several large deals this quarter, so those partnerships are clearly bearing fruit. Now let's turn our attention to the public sector, both federal and international. They highlighted some significant wins in both areas.
In the federal market, despite the current focus on budget constraints, Zscaler sees a big opportunity. Their zero trust architecture allows government agencies to replace a bunch of old, outdated security products with more modern and cost-effective approach. That's music to the ears of any government official trying to do more with less.
It's like a security upgrade and a cost savings all rolled into one. No wonder they're seeing traction in the federal space. They even mentioned they have a presence in nearly all cabinet-level federal agencies.
And on the international front, they scored a huge win with a national government in the Asia-Pacific region, an 8-figure total contract value deal. That's a major vote of confidence in their platform.
It shows that Zscaler's appeal goes far beyond the U.S. market. They're building a truly global presence, which is impressive. Now, last but not least, let's look at their guidance for the next quarter and the full fiscal year. What are they expecting?
Well, for the third quarter of fiscal year 2025, they're projecting revenue between $665 million and $667 million. That's a healthy 20% to 21% year-over-year growth. They're also expecting an operating profit of $140 million to $142 million and earnings per share of $75 to 76 cents.
Solid numbers all around. What about the full fiscal year 2025? What's the outlook there?
For the full year, they're forecasting billings between $3.153 billion and $3.168 billion, representing 20% to 21% year-over-year growth. Revenue is projected to be between $2.64 billion and $2.654 billion, which translates to roughly 22% year-over-year growth.
So continued strong growth across the board. And what about profitability? Any insights there?
They're projecting a full-year operating profit of $562 million to $572 million and earnings per share of $3.04 to $3.09. Plus, they're expecting a healthy free cash flow margin of 24.5% to 25%.
So the message is clear. Continued growth, strong profitability, a healthy cash flow outlook. Sounds like Zscaler is firing on all cylinders. But now comes the fun part, our This Is Not Financial Advice segment, where we get to speculate a bit and maybe explore some unconventional ideas based on what we've learned. What's a wild but plausible trade idea that comes to mind after this deep dive into Zscaler?
Okay, here's a thought. What if you went long Zscaler, but simultaneously shorted companies that are heavily reliant on traditional MPLS networks for branch connectivity? You know, those multi-protocol label switching networks that have been the backbone of enterprise networking for years.
Okay, I see where you're going with this. Zscaler's Zero Trust branch solution is essentially aiming to replace those complex and expensive MPLS networks, right?
Exactly. And as more companies embrace cloud-first strategies and adopt Zero Trust architectures, that demand for traditional MPLS could start to dwindle. So it's not just about betting on Zscaler's success, it's also about recognizing the potential disruption they're causing in the networking space.
It's a bold move, but it definitely highlights the ripple effects of Zscaler's Zero Trust Everywhere vision. Of course, timing is everything, and there are inherent risks involved in any short position, but it's a fascinating angle to consider. Just remember, folks, this is purely hypothetical. It's not investment advice, and you should always do your own research before making any trading decisions.
Couldn't have said it better myself. Always do your homework.
All right, that wraps up our deep dive into the Zscaler Q2 2025 earnings call. Hopefully, you've gleaned some valuable insights into their performance and their ambitious plans for the future, but now we want to hear from you. What stood out to you from this report? What aspects of their strategy do you find most compelling? And as the zero trust everywhere approach continues to gain momentum, what are the potential roadblocks or challenges you see on the horizon?
And how do you think the competitive landscape will evolve as more companies embrace this new security paradigm?
Jump into the conversation and share your thoughts. We'd love to hear your perspective. This has been Talk Tickers, your go-to source for clear, concise, and insightful analysis of the most important earnings calls. Remember, stay informed, stay engaged, and as always, invest wisely. Until next time.